Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Tuesday, the 16th of May. And we're on the edge of our seats, or some of us are, on the basis that we could have a post-February inverted head and shoulders for the FTSE 100, which means that if we break that resistance line there from February around 78.80, we could have up to 600 points of upside for this market. Obviously, that sounds rather crazy and in the face of all the doomsters and Britain bashers that there are at the moment, and end of the world cost of living inflation type people. But here we've got support at the 50-day line 77.20. Above that, the 78 or 7900 level to break, and then through that, hopefully we would get up to 83 or 8400 over the following 1 to 2 months. On the downside, break of 7700, probably 76.30. The initial April support, the worst that we can see at the moment. RSI just on the right side of the neutral 50 level, just 50.7 or 50.8, so at least we are tipping in the right direction. Probably what we'd like to see now in near term is the 50-day line to resume its recent upward trajectory, which it stopped at the beginning of May. Moving on to the DAX, which looks like a party compared to the FTSE. It's never been as bearish, even on the dip with the Credit Suisse debacle. Still looking for that end-of-day close through 16,000 to give us up to 16,700 now by the end of next month. Obviously, it could be sooner, but let's be conservative on these things. On the downside, the worst that we can see at the moment is the floor of that rising September trend channel and the 50-day line, 15,500. On to the Dow, which I believe snapped its 5-day losing streak yesterday, which is very, very generous of it. Here we bounced off the rising 50-day moving average. So from a technical perspective, it really had to bounce around that area, 33,100. Still looking for an end-of-day close or a weekly close above 34,000 to give us the big breakout here, which would be towards 36,500, hopefully over the summer. On the downside, the worst we can see at the moment is 32,700 at the rising 50-day moving average. If you're cautious, though, you wait for the RSI to push above 50, the neutral 50 level, versus 47 at the moment, before deciding that it was safe to get long. Again, another inverted head and shoulders pattern there from the beginning of the year. Moving along to Bitcoin, which has been frustrating. Still looking for the breakthrough 30,000. I've got a line of resistance there from last month around the same level as the 50-day moving average to 28,600. Below that, the risks 25,000, but so far we've just had a little peak below the late March support at 26,700. So looks as though some stability has been found. Again, you'd want to see the RSI nearer to 50 or above neutral 50 before assuming that the pullback that we've had since the beginning of April was finally out of the way. On to the stocks, and first one is one which has been requested by somebody who's obviously very keen, Aura Renewables, and here we got the first glimmers of recovery with a break above the 50-day moving average. That's around 5.5 pence. Want to see a clearance of the 200-day moving average around 6.4 pence. We've had one go already, and above that we would be heading hopefully towards 10 pence by the end of next month, which would be quite a result really for the longs there. We do have bullish divergence here in the RSI window, so we had lower lows or a lower low for April, but higher RSI trace, or at least a level RSI trace on that situation. Stock I covered just a week or 10 days ago was ASOS in the FTSE 350 sweep, which I don't think had any reaction at all. But what was interesting then is that we were just concerned that if we broke back below 680, which was neckline support, we could head down to 550. Obviously, the shares have gone even lower than that. So it is now a matter of trying to work out where support might come in. And here, the most likely scenario is that we've actually hit a near-term low there. So yesterday's low around £3.80 hopefully will stay in place. And we'll try and fill the gap up towards the top of that gap, last gap down, up to, which is around £4.99. So £4.99 at the moment, the best case scenario on a dead cat bounce there for ASOS. But obviously, we're not assuming that this is the end of the pain for shareholders just yet. May was always looking as though it could be the the end of the range-bound trade in Arrow Exploration, and with the good news yesterday, which is effectively de-risked the company, the shares are finally on their way through 21 pence or through 20 pence, looking for the top of that rising trend channel from the beginning of last year, as high as 28 pence, hopefully by the end of next month. Unfilled gap to the upside yesterday, and we've broken the top of that gap day, so looking very encouraging indeed. The other point to note there is the way that both the 50 and 200-day moving averages are rising, and the next time they cross, well, it should be a golden cross, and the run-up to a golden cross is normally the strongest part of the cycle. This stage only well below 19 pence, that initial April peak really delaying the idea of ongoing recovery this time. On to Caracal, and here we're still consolidating either side of the 50-day moving average, still in that rising trend channel from January, top of the channel there around 0.6 pence, and that's our target hopefully by the end of next month. If you're cautious, you're waiting for an end-of-day close above the 50-day moving average around 0.36, and you're waiting for the RSI to push back above the neutral 50 level versus around 45 at the moment. Onto a stock which doesn't get much airplay anywhere, but that's why we have the bulletin board heroes to sort of sing about unsung heroes, if that makes any sense. Here we've got Glantus. It's in a broadening triangle from November, gapped above its 50-day moving average around 7.4 pence. And above that, we're looking for a potential return to the area of the 200-day moving average and the top of the triangle at 14 pence by the end of next month. Obviously, we don't want to see any price action really back below the recent 7 pence support area. Moving along to Galileo, and here we have a nice bounce for the shares above the rising 50-day line, which is normally a positive technical development, actually bouncing on that RSI uptrend line there from February or January in fact, and we've still got the 200-day line rising, so above the 50-day line 1.12, looking for a return to 1.7, 1.8 hopefully by the end of next month. You can see that bear trap gap reversal that we had last July set the scene for a positive move for the sort of positive period for the shares, but obviously we came back very close to retesting or filling that gap last month. On to a stock which used to be a bit of a private investor favourite, and hopefully that might happen again after a long time in the wilderness. Here we've broken on Mkango the falling wedge that we've had there from the autumn. The level there around 10.3 pence above that, looking for at least 13 pence, and the floor of the February gap down and post-February resistance for the shares. I covered Nanosynth, I think yesterday. It's a long time ago, can't quite remember, but that particular call worked. We had the break of that resistance line there from April, and above the 0.06 pence level, looking for the predicted 0.12 pence level, perhaps as soon as the end of next month, and the way things are going, by the end of this month. If you're a fan of the shares, really think that this is the end of the bear phase, then it would be up to 0.14 in the 50-day line, which has been resistance for much of the past year. One of the more frustrating stocks around is Prospex, where we know the fundamentals are all quite chipper, but here we've been having a bit of a dance since the end of March, either side of the 50-day and 200-day moving averages. 200-day line still rising there at 10.6 pence, and like to see an end of day or weekly close above that. We've got the RSI now back above neutral 50, just above it at 51. So if you're really looking for the next stage up, probably an end of day close now above the 50-day line. Around 9.9 pence would do the trick, as that was the block back in April, which was obviously a little bit disappointing. Upside up to 14 pence on the top of that falling trend channel from November. Moving on to another off-the-radar situation, Rurelec, which has spiked up. And if you look at the big pictures on the chart, I've just kept the old support and resistance line, the triangles. The triangle there on the daily chart, that was looking for 1.1 pence above the 200-day line, 0.47. That is where we hope the shares could go by the end of next month. Another former private investor favourite is Supply Me, and here it looks as though against all the odds it's trying to break higher. Nice little flag here, looks like a mid-move consolidation. We've got the 50 and the 200-day moving averages rising. All we need to see now really is an end-of-day close above 0.1 pence, and then we could be up to 0.18 as soon as the end of next month. Maybe we'll repeat that spike that we saw back in the summer, even if it is not the definitive turnaround for the shares. A couple of stocks to go now, and both of them are big private investor favourites. First one is Synergia, which has made good on the latest break of the 50 and 200-day moving averages. In fact, they could be going into a golden cross. I think if you look closely, ready to, but I think the 200-day line is starting to rise as well. But whatever that is, we've got a V-shaped bull flag and looking for 0.22 as soon as the end of next month, while we hold above 0.12 over the near term. Finishing off with VAS, where I know a lot of people have been willing the shares higher, and it looks like their prayers and hopes are being answered. Beautiful hammer candle yesterday, rising 50 and 200-day moving averages, and initial target here up to 0.9, hopefully by the end of this month. And if you're a fan of the shares and looking for the big picture, this will cheer you up. That the next target there will be 1.1 pence, and the top of that wider triangle there from the end of January. That's it for me today. More updates tomorrow.